Eric Muathe, Muathe.com, with a weekend analysis video for the weekend of September 23rd and September 24th, 2017. I am recording this video September 22nd with about half a session to go on Friday. This is how the market is trading right now. So in this video, we're going to take a look at the general market, take a look at some commodities, take a look at the dollar, take a little bit of a discussion on world markets, a little bit. And then we're going to take a look at breakout candidates and also some stocks that I think look like they are poised to go lower. So you got some ideas at the tail end of the video for subscribers. Otherwise, for those who are not subscribers, let's continue on with the free portion of this weekend's market analysis video. And I begin with the Nasdaq weekly. We can see that this week, what the market is doing, in my opinion, is coming back to test the prior breakout level. And the level that we are watching is 6387.75. So as long as the Nasdaq is holding above that level, the breakout continues to be intact and in play. If the market goes on to break that level, then that would be asking questions about the market strength and potentially indicating with a failed breakout that the possibility of movement lower is now increased. We can also see that as of right now, we continue seeing the market make new highs on the weekly chart for the Nasdaq, but this is coming at the expense of the technicals, which are making lower highs. So that negative divergence definitely does set the stage for a visual indication of potential move to the downside. Now, there's a line I need to share with you that I've been talking about for a couple of weeks that I think is still relevant. In fact, two lines. The first one is very obvious. It's the RSI lows line on the weekly for the Nasdaq. So as long as this line is holding, the Nasdaq should continue being stable to bullish. And the other line goes to the previous resistance line. So this was resistance, as you can see. But once the market cleared that line, you can see that the market did pick up momentum at the beginning of 2017. So what we've been doing is extending this line. And this line has given us good re-entry levels in the market in terms of support on the line for that re-entry, support on the line here towards the end of June for this re-entry back in the market, uniform activity below the line back above it for that re-entry, and over the last 2-3 weeks we bounced on this line. So as long as we are above those two lines, let me bring back the previous line, we can still assume that the market continues to be stable to bullish as far as the Nasdaq is concerned. And we can also have a point of reference here, because if and when we break below those two lines, that would be indicative of a market that wants to go down. As far as the daily chart is concerned for the Nasdaq, as of right now, the daily breakout is stalling, and the level to watch there is 6422.75, which goes back to the prior daily closing high right there. So the more we stay below this number, the more the indication is that with a failed daily breakout, the more we stay below that number, the more it just invites a bearish tone. If the market can recapture the level back above that line, that would be bullish. Now don't forget, as of right now, we also see that on the daily we have the same look as the weekly, where we did record an improvement to day all-time daily closing highs, but this came at the expense of this declining RSI resistance line. And over the last couple of attempts to move above this line, market's been rejecting it here. So we continue to see negative divergence, and the fact that the Nasdaq is close to 50 suggests that between the Nasdaq the Dow and the S&P 500, it could easily slip below 50 and have a big down day. If we take a look at the hourly, actually the 30-minute chart for the Nasdaq, we can see that there's a line connecting RSI lows that is coming in play. And market's been holding this line over the last couple of trading hours. So as long as that is holding, we can expect that the market stops going down around current levels in the short term. And if we go on to break that level, then that's when we can see a continued move to the downside. Let's take a look at the Dow. And we begin by taking a look at the Dow weekly. Now the Dow continues to hold firmly, strongly above the prior weekly closing high. In other words, it's another way of saying the breakout for the Dow is still intact, looks great and very powerful. The level we're watching there for a breakout that the Dow did move above was 22092.81, going back to this weekly closing high. So as long as the Dow is above this number, it continues to be very strong. Also, as long as the Dow is trading above 69.1 on its weekly chart, we can assume that the market is net sideways to very bullish. And for those who are new to this concept of 69.1, let me show you quickly here what the Dow has been doing. You can see we moved above 69.1 here. We stayed above it until here. So throughout that process, we had a bullish tone in the market. We recaptured the level back above 69.1 here. We stayed above it until here. And again, we had a period of many weeks where the market net was trending higher. So right now we are back above 69.1, which means we are still in a sideways to bullish market. Let's take a look at the Dow and we go to the hourly. We can see that the Dow should remain stable as long as short term it is holding above this line, RSI lows line. If we take a look at the 30-minute chart for the Dow, we can see that it is also holding that line as of the lows of Friday so far. Markets come back to test that line, we seem to be holding. Now if we break, as we saw with the Nasdaq, should we break below that line, then we can see a slide. But for now the market is holding support where it needs to. Let's take a look at the SPX. Go to the weekly, and the S&P 500, also like the Dow, continues to hold above its weekly breakout level. In fact, even the Nasdaq has yet to break down below its weekly breakout. So this breakout continues to be in play. In other words, the market should continue being strong as long as the S&P 500 is holding above 2476.83, going back to this weekly closing high. Now, of course, we can see a little bit of an issue here right now, an improvement to all-time weekly closing highs, but the RSI is not following through for the S&P 500. S&P 500 has not moved its weekly RSI above 69.1, and of course we see negative divergence. Ultimately that might be an issue, and that could cause the SPX to start rolling over. But to keep it simple, the best thing to do is just watch this number here. As long as SPX is above this number, then the weekly breakout continues to be okay. But if it goes on to break below that level, then that's going to be a sign of a market that wants to move lower. And it's always good to show this example here since it's on the chart here. For example, we tried to break out towards the end of 2015. We failed. It's that failure that ultimately brings us lower here. So let's watch the current breakout level. As long as it is holding, that's good. If it doesn't hold, then that is a sign of a market that could easily roll over. Plus, don't forget, just like we saw with the Nasdaq, I should point out that it's going to take some energy to break the market, because if the market is going to go lower, it would have to break this support line for the S&P 500 first and foremost. And you can see that's going to take a while. And I'm not saying it can't happen, within a couple of days, but for the market to eventually move lower, it would have to break below this line of support. So that's one thing, that one aspect of just kind of being patient with the bullish trade, because the market has yet to break down. It could break down, but really we haven't seen a major break. We would have to break below this line for there to be a serious threat to the downside. Also, based on the prior breakout, like we saw with the Nasdaq, there's a line here that was resistance, and once we broke out above that line here, which is this entry in November, we can see that if we extend that same line, market's been bouncing on that line successfully since then. So the prior resistance line has become support here for this re-entry, support here for the re-entry there on the weekly chart, and support here, the re-entry about 4 or 5 weeks ago. If we take a look at the S&P 500 daily, we can see that it continues holding above its daily breakout level. And that breakout level was 2480.91, going back to this daily closing high right there. So it's a good breakout. We continue holding above that. Looks good. Now, if you're looking for some visual problems with that breakout, we can see we've made an improvement to daily closing highs, but this has come at the expense of the technicals, which continue to show some type of resistance here, as you can see. So that negative divergence could ultimately be the cause for a reversal. And also we can see that based on the uniformity principle or the method, once we broke below this level, market came off the highs. So we can take that information and draw our resistance line. Anytime we have uniform activity rejection on the same line, we know that's good for a reversal. So the daily is suggesting that there's still more downside based on that resistance. And if you're new to that principle, which I call the uniformity, if I don't forget, I hope I don't, I'm going to have a link in the description of the video that explains this concept in detail. And again, using the uniformity principle that I just discussed here on the S&P 500 hourly chart, we can see that there was a recent breakout, and that breakout brings the market off those lows there. And I think what's happening here is we are coming back to test that level. Anytime we have uniform activity, hence the method is called uniform activity by yours truly. That was a re-entry. We came close here. That was another re-entry, and now we are back here and we are already showing a re-entry on the hourly chart. So as long as this line is holding, we can anticipate that the market is going to be stable and hold current levels. Of course, if we go on to break that, then that's going to be a sign of a market that wants to test and probe lower prices in the short term. In fact, take a look at the 5-minute chart, and we can see that the 5-minute chart is showing a topside resistance line as we continue trading here with about half a session to go on Friday. Market's been trying to move higher, but it's been rejected on this line on the 5-minute chart. And right now, let me show you where we are trading. That's how the markets are trading right now. We shall see whether that line on the 5-minute continues causing problems for the market. And of course, the same line can also be used as a breakout level. So if the market changes direction here, all the market would have to do is just take out that line to the upside, and we would be off to the races again. So let me wrap up the free portion of this video, and let's begin here and just take a look at the monthly charts for the Nasdaq. which continues holding above 69.1. We know that. We've known that. The Dow, strongly above 69.1. In fact, since about November of last year. Hence why we get this acceleration. And of course, S&P 500 continues holding above 69.1. Pretty much for 2017. Hence, we've had this acceleration on the monthly chart. Keep in mind, as we saw in the weekly for the Dow, we can see S&P 500. A good example of this is one I show every weekend. Move above 69.1 here. And for 2 years, we stayed above it. And that was good enough for this period in the market where we had a strong uptrend or a bull market. And it's only until we moved back below it here that we finally get a break from the upward trend. So as long as we are holding above 69.1, we know that markets are going to be stable to bullish. So that concludes the free portion. And again, the remainder of this video is for Muathe.com subscribers only, where we discuss breakout ideas, breakdown ideas, take a look at commodities, and a brief discussion on world market situation. Otherwise, enjoy the rest of your weekend. Alright, let's continue on here for Muathe.com subscribers. So let's begin by taking a look at the monthly chart for the Euro FXE.